Hello, welcome to the weekly technical analysis review for Monday, March the 9th. I'm Rafi Baijan at xm.com, and the pairs we're going to have a look at this week are the dollar yen, the pound dollar, and the euro versus the Swiss franc. So starting first with the dollar yen pair in the daily chart, looking at the momentum indicators, it's clearly bearish in the short-term stochastics and RSI both in oversold territory. We did see prices opening with a big gap lower this morning and that big decline earlier in the day before prices recovered a little bit, which at the moment they're standing slightly below the 123.6% Fibonacci extension of the up leg from 104.44 to 112.22. So that level is 102.61. If prices manage to recover back above that level, we could see increased positive momentum and potentially a climb back towards that swing low of 104.44 from back in August of 2019, which also did act as a bit of resistance earlier in the day. So 104.44, a key resistance level, and then above that the bulls may try to make a run for the 78.6% Fibonacci at 106.11. It would be quite unlikely, though, dollar yen would be able to recover much above the 106 handle, given the extent of the bearish pressure we're seeing at the moment. And in fact, we should be focusing more on how low dollar yen could go in the coming days. We do have first the 138.2% Fibonacci extension at 101.48, which earlier we did see a bit of a spike below that. After that, we have the 161.8% Fibonacci at 99.64, followed by the 200% Fibonacci at 96.67. In the medium term, although the 50-day MA is still holding above the 200-day one, given the scale of the losses, it's only a matter of time. We do see bearish crossover, so both medium and short-term pictures are looking quite negative at the moment. Let's now turn to pound dollar, because we do have a bit of a mini uptrend in place at the moment, though looking at the stochastics, that uptrend could be running out of steam. Percentage K line is about to cross below the percentage D line. The MACD has just crossed into the above the zero level, but it's still very weak, so we could easily see a reversal to the downside, and if that happens, support should initially come at the 1.30 handle where the 50-day MA currently lies. Below that, we've got the 23.6% Fibonacci at 1.2911 of the down leg from 1.3514 to 1.2725. Slipping below those levels could increase the downside pressure, and we could see pound dollar returning to a more negative picture. Though in the medium term, at the moment at least, pound dollar is comfortably holding within its neutral range. In order for the medium-term picture to turn more bullish as well, we would have to see the cable climbing at least above the 61.8% Fibonacci at 1.3212, which did act resistance earlier today, and then we've got the 78.6% Fibonacci at 1.3345. And finally for today, let's have a quick look at the euro versus the Swiss franc. We can see that the pair still stuck within that descending channel. Prices, though, are seeing upside momentum today. The RSI is pointing upwards, hasn't quite reached the 50 neutral level, but we do have bit of a positive momentum there intraday. At least the MACD is holding just at its red signal line. Immediate resistance is at the 20-day moving average 1.0623. So if we do see euro franc climbing above the 20-day MA, that would potentially strengthen the positive momentum, and we could see the euro franc being able to climb back above that descending channel. We did see some spikes in late February, and then we've got the 50-day MA at 1.0695. If euro franc is unable to clear those hurdles, it's going to be pretty much stuck in that bearish channel in the medium term at least. If we do see further declines, particularly if we do see that important support at the 61.8% Fibonacci. Breaching that support would open the way towards the lower half of that regression channel, and the next level to have in mind is the bottom of the channel at 1.0455, and then further down we could see Euro franc heading towards parity at the 78.6% Fibonacci at 1.0154, and the Fibonacci we're talking about is of that long-term uptrend from the 2014 low to the 2017 high. In particular, specifically, the 61.8% Fibonacci is an important level to watch out for to the downside. So that's it from me. Thank you much for watching and have a great day.